All right, y'all. What's up? There's only a few of you. It's probably because I push it up early, but shouldn't be a long one tonight. There was some sick moves today. Obviously, big dump, but let's get to it. Maybe there'll be some late stragglers, but I remember to press record this time on my OBS, so they'll have it recorded too. But so first, we have this silver bullet long. What's up, CNJ? So right between 10 and 11. The only thing that didn't make this, it was still probable, but it would have been nice to see these equal lows get swept. But once we get this set up, we can assume that this is just engineered sell side liquidity that will be tapped into later. And we'll see why that was once we go forward. So we have this buy side liquidity pool right here, right? So we do sweep these lows. We come down one more time, but then we displace above what? This bullish breaker, low, high, lower low. And I like these candles that look like this, big bodies, right? Prominent bodies. So I'm watching this whole time we're chopping around in here. I'm watching if we get above and then how do we act it when we come back in, right? So we have the breaker and we also have this fair value gap in this order block. This order block's opening price is also the CE of this baby fair value gap. Random bounce right there, and we displace higher, reaching for the buy side liquidity. So even though we had these equal lows here, you can feel pretty comfortable once we get this reaction, right? Once we see this displacement upwards above this structure, okay, even if higher time frame order flow is bearish, we can assume that there will be some sort of manipulation, which we'll see in a second on the following slides. But you have the breaker as defense, you have the fair value gap, you have this one that's not noted, this supported price as well, the body stayed inside, but you have these two candles right here, which are bullish order blocks, excuse me, right? So even though we have equal lows, these will normally reach for internal liquidity. Once you get this formation with a few discount or bullish PD arrays, whatever you want to call them, this will typically send price to at least internal liquidity. So you can take profit here if you want to be, since we know that the order flow has been bearish, you can be nimble. You can take profit here. You can put your stop loss to even here, or you can, hold for the full ride and just accept the risk. In this case, stop loss, just to save a few points, it's right below the mean threshold of this bullish order block, right? Right around the midpoint, because if it goes down here, that means it would have smashed through the breaker, the fair value gap, the order block, and then obviously a fourth beat array, the mean threshold of this order block. So you might as well, if it gets down there, it's probably going to sweep the lows anyways. Or if it taps below that, stops you out, and then reverses, that would just be luck anyways. So you want to plan your risk with, logical reasons and whatnot, following the PD arrays that are going to fail or shouldn't fail. So I would have just put my stop loss right below mean threshold here, or you could do it right below the breaker as well. Okay. So that was the silver bolt long. And then you can see as well, so we don't have all that lipstick over here on the chart that I just showed, right? That pushed us upwards. But where did it push us up to? The new week opening gap, okay? After we get through this presentation, I'm going to go through the actual charts so we can look into this a bit further. But like I said, these equal lows were left, okay? So that's engineered sell side liquidity. We push up to a random place? No, to the new week opening gap. What did I say? I want to see if we get to the CE, do we respect it? Or if we fail to, what do we categorize that as? Weakness, right? We're spending time in here. We're displacing away. Okay, so you could have entered, see this fair value gap here? And I did not enter this because this was not in my trading hours. This occurred at 11. Okay. But for review's sake, higher time frame PD array, new week opening gap, I classify that as one. Okay. It would have been nice to see the body. See how we barely closed below there, but didn't really displace? It would have been nice to see us not close back above it, but this high, right? This, we should assume that this is safe because using the logic I just described, we're failing to get to the new week opening gap CE. We have this buy side liquidity sweep, okay? And higher time frame order flow is bearish and not charted on here as well. This reached up into a premium, so above 50% of the intraday range up to this point. Okay, so from this low to the high, this was above a premium in a higher time frame PD array, and we failed to get to the CE. Okay, so we'd like to see that failure, and then we're hunting shorts. I would have, like I said, would have liked to see this push us lower then. It did not, but if your stop was above this, you would have been safe. We get another good setup here, right? Market structure shift, the classic break of the swing low. Come down, push back up. New week opening gap one more time. This fails, right? Acts as resistance, sends us lower. Okay. Sully said, do you chart your new week opening gap from open, close, or wicks? It is Friday's open, or excuse me, sorry. Friday's close to Sunday's open. So the bodies, not the wicks. And then just the midpoint between those two levels. Okay. And I can show you an example of that too, just real quick when we pull up the actual charts. So this was a good shorts. Now to go more in depth on this, I mentioned earlier in chat, I wanted to talk more about open, high, lows, close, which is basically accumulation, manipulation, and distribution. So this is that same move. It's just a 5-minute chart, okay? But the purpose of this slide is for the OHLC, which is open, high, low, close. So right at 10 a.m., that is the opening of a 4-hour candle, okay? Since we understand accumulation, manipulation, distribution, the majority of the time, there's going to be a wick higher, and you can see over here, wick high when bearish is just the manipulation phase. So we can expect at 10 a.m., say, obviously we have aggressive selling here. We don't want to short here regardless because it's in a discount. We want to see price reach up to some sort of premium to give us a better short, okay? So with that logic, we can also add that 10 a.m., we expect some form of manipulation, which would be the high, right, of the 4-hour candle that opens at 10 a.m. before the distribution downwards, the continuation downwards towards our sell side targets, right? So see how we have this fair value gap right here, and I wish I marked this. This little sibby here, obviously, like I said, it's in a discount at low of day, but you can avoid these moves because it's right at 10 a.m. when that 4-hour candle opens, right? So we want to wait for it to dig up and create that upper wick on the 4-hour candle, okay? And again, just to jam it in, to serve as the manipulation phase, right? Now 5-minute inversion here. Yeah, I have a 1-hour example next, Tyler. Today's price action was absolutely gorgeous. But 5-minute again inversion here, close below, high doesn't get breached, and we sell off. So does this make sense, guys? So we can avoid these moves. So reverse everything for bullish action, obviously. But 10 a.m., it's not just some random time, right? We can start to combine this, and we'll get into more depths for these teachings as we go on and people become more and more familiar with the concepts. But we've been talking about the 950 to 1010 macro, right? Now we can add the logic, which is simple but easy to forget because people, including myself, it's easy to get caught up in 1-minute immediate rebalances, 1-minute inversions, all the concepts. But this is the market, guys. Accumulation, manipulation, and distribution, which is basically just in candle form, open, high, low, close, okay? So we know that the 4-hour candle opens at 10. We know it's going to make some form of a high. It's going to reach for sell side in our distribution phase, and not charted here as well. We had major sell side that we were reaching for beyond this level as well, which would have been a good move. So yeah, then we create the low here, and then there has to be some form of close. Very rarely you'll see it close on the low. It will happen, but typically you'll get a wick up, right? All right, so on to the next 1 hour candle, open high, low close. This is lunch, okay? So see how these things come together? Same thing. We don't want, yes, we get a little bit of a sell here, but we'd rather wait for some form of clear manipulation, clear reach for premium, clear sweep of this buy side, this final buy side sweep right here. And now, just to mention, we're back to a 1 minute chart, okay? But 12 p.m. on a 1 hour, or excuse me, 1 hour. I just confused the hell out of myself. This is a 1 minute chart, but I'm discussing the 1 hour candle, so sorry about that. So we open here for the 12 p.m. 1 hour candle open, okay? So we want to see some form of manipulation before we go lower because we're assuming that sell side isn't done. We have more sell side objectives to reach for, okay? And this is, as you can see, Monday low. And we tapped into it here. We retraced a little bit, but then we eventually got it. I just stopped here just for organizational purposes. But again, this is exactly what we want to see. We don't want to short right at 12 p.m. So say you're looking for a continuation to this Monday low, because we know that's where we're likely to go. See this little volume imbalance here? Not only are we obviously in a deep discount, but we want to see some form of manipulation above the opening price of the 12 p.m. candle, right? So we don't have to trade this. If it sells down, it'll happen sometimes. If it just dumps, we miss it. But we're looking for quality setups. We don't want to short in a discount. We want to short in a premium, right? So we allow this to happen. This is the manipulation that creates the high of the wick, right, over here. And then the distribution is down to Monday low. Okay, so in terms of a setup, we sweep these highs right away. We get below this BISI, this fair value gap. And how beautiful is that? We just wick one tick right up into it, sell off. You can take a 5-handle partial here. That can be your full trade. This is just preference again. Or you can trail your stop to break even, trail your stop to whatever you want to do. But on heavy days like this, I would just let the trade play out. Okay? Again, say you entered up here, best case. You don't really want to enter down here. You could, but it's higher risk because we just took out this sell side from what was the low of the day, and we're in a deep discount, as I stated. But this would have been a nice thing to see if you were managing the trade from your entry up here, right? So we're in the distribution phase. Another BISI gets formed just to reach back into a short-term premium, right? This volume imbalance, the high of this SIBI. We see it fail, come back up. The body respects the midpoint of it. We do wick above, but the bodies tell the story. We sell off, and the low was here, the close of the 1 hour candle. This is 1 p.m. But I just added a few more candles just to annotate that we did get Monday's low. So really nice price action today. I hope that makes sense, but it's easy to get caught up, like I said, in the various concepts that ICT talks about, that I talk about, that you see people in chat talking about, whether it's breakers, fair value gaps, order blocks, standard deviations, whatever. It's easy to get caught up in all that, but all you're trying to do is spot the manipulation phase and get in tune with order flow, right? So on days like today, large downward expansion days, all you got to do is just wait for price to reach for some sort of premium. In the moment when price is dumping, it's going to feel like it's going to just take off without you, right? But you know that there's going to be these retracements at the opening prices for these candles, right? So you just want to wait for the retracements to a premium of any price leg. And you can't really see it here, but this high, it's kind of cut out of the chart, to this low, that's a price leg, okay? And this is above a premium. That's above 50% of this price leg. So a short-term premium, is the manipulation phase, which is also the high of the 1 hour candle, and then we distribute lower. All right, so beautiful action today. I hope that makes sense, but that's what the market is. It's accumulation, manipulation, distribution. So that's it for the PDF. I'll pull up charts now. Does that make sense to everyone? And I will share this PDF as well. Give me a second to pull up the charts, guys. But today is another good example of, if there was nothing clear to you yesterday or on Monday, there's going to be days like this when it's large, clearly directional, and you can get these easy setups, right? It's not easy to execute as a trader. It's hard. It's scary. You don't want to put on risk. It's scary to get stopped out. But there's no rush. Don't force a low probability trade just because you're sitting in front of the charts. You're a risk manager. You're waiting for clear, high probability setups that make sense to you. Okay, now, again, I went on a tangent and forgot to switch the charts. But can you guys see the weekly chart now on ES? Cool, thanks, Sully. So now I'm going to do some just looking forward, and then probably some things I wanted to mention on top of what I just showed you guys in the PDF presentation. Just to add on to why we went lower and things we were watching from like the hourly or 4 hour. Okay, so this just happened. Yeah, Sully. And I remember you mentioned this today too. This just happened. They gapped down the market and we got this sell side. So we're reaching major sell side liquidity pools, right? Later, Panda. Obviously, we want to reach for this as well with continuation. It's clear. But when we reach these major levels, it's easy to think we're going to go lower, right? Which obviously we prefer sell side now, just because we've been so heavy. But it's easy to chase too, especially if you like miss moves like today or yesterday. All right. But let's go to lower time frames. It was good that this was left, that we didn't come up to this inefficiency. We only came to this one. So what is this? Breakaway gap. Indicate that we're weak. We came up to this one. We didn't even reach the high of this inefficiency, and we obviously couldn't reach this at all. So again, this is just 4134 is the continued target. You can mark these two. $4186 relative equal lows, but it's looking like that's going to get taken. Again, this is adding on to those slides that we went over, the short setup. Right, we got back below this SIBI, came up, and I have this labeled as an inversion, and it shouldn't be an inversion, it's just a SIBI, a reclaimed SIBI, right? So yesterday, we took Monday's high, got back below this 4 hour today, came up right to midpoint, sold off. That's what we want to see. 1 hour, beautiful today again. What time is this? 11, right? So just we were talking about accumulation, manipulation, distribution. Candle opens, wicks up to a random place? No. Is it doing something random? No. It's indicating to us that it can't reach the new week opening gap CE and the little white line, which is the midpoint of this hourly fair value gap. So it's weak, right? I want to mention one more thing on this chart. This is a good example of one setup for life. Now follow my cursor here. This high, these are session highs that I'm going to go over. So last Friday, lunch high. Monday, lunch high. Tuesday, AM session high. All those session highs were swept yesterday at 4 when they had earnings. So they used those earnings reports from I believe it was like Google or Microsoft, to sweep that. So if those objectives are done, what's it going to reach for? This low here is Monday's PM session low. This low here is Tuesday's lunch low. This low here is today's London low, right? So see how it goes from session highs to session lows. So if order flow is bearish on a higher time frame, what do we want to see it do first? Sweep session highs. That acts as the manipulation phase, and then we go lower to session lows and continue downwards. Does that make sense? So now for continued sell side, obviously we're absolutely dumping and we're in a deep discount. But price, now that it's expanded away from this new week opening gap, I don't want to see it go back up here to this new week opening gap, right? Because, and this Sully, before I forget, see this candle? This is Friday's closing price. So the black line is the new week opening gap low. I have it anchored to that body. This is the open of Sunday at 6 p.m. I have the high anchored to that. And then my fib is just right from the low to the high, and the red line is the 50%. But just to walk through how we've delivered through this new week opening gap and the logic behind it, we're treating it like an inefficiency. So what happened? We gapped up. We had sell side delivery through it. Then we had buy side delivery through it. Now we're just spending time inside of it, right? We're chopping around, going up, leaving this buy side, coming back down, sweeping the buy side, and now we're expanding away from it. So now I want to assume that all the balancing is done in here, right? And again, now let me go down to 15-minute. I'll be using this the same way I use a new week opening gap. Tomorrow, going forward, whenever we come back up in here, right? So we just had this big gap down for a new day opening gap. This is today's close at 5 p.m. at 4211, and then we gap down and open up at 6 to 4202, right? So the levels I'm watching are the low, the high, and the CE, so the midpoint between those two levels. So how do we treat this now? This is just another inefficiency. So all the logic I teach with fair value gaps and such, I want to see occur. So some hypothetical scenarios would be that we come up, spend some time. Best case scenario, to be honest, would be if we do come up to a deep retracement, we have this buy side. I'll label it real quick. Maybe something like this. And again, we have to see where we are in the morning, but if we come up, deliver buy side through the new day, opening gap, then deliver sell side, then take this, right? Something like this, and then we expand lower, right? Below the new day opening gap. So a similar price action we got with new week opening gap. There's obviously other scenarios, and we can refine those when we see the price range from London and such at New York open tomorrow. But I'll be watching this new day opening gap on ES. I will quickly pull up NASDAQ, which I have not looked at all since I've sat down before class. So let me pull that up, but it'll be more of the same. Yeah, Willis. If anyone didn't read that. When we were talking about the ES long from the presentation slides, Willis said, look at how NQ swept the lows, giving us better reason for the AM long silver bullet that we were talking about, right? So I'll start. Higher time frame. Oh, that is sick. How nice is that? Weekly volume imbalance fails. Come right back up, right above CE of it. Dump down, filling out this fair value gap, but below these lows, okay? So from a weekly standpoint, just levels to watch. Right now we're right at it. 75%, 14,338, the low of it. Right, and now, since we're heavy, we can start to mark out other discount PD arrays. Okay, it's fair value gap. These lines here are the volume imbalance. So these can be targets, areas we want to watch for sensitivity for retracements, things along that. Let's go to the daily. Again, beautiful too. So remember how ES had the two fair value gaps and it left one up top? Once we saw this reaction out of the CIBI CE, that gave us a clue too that the higher one would become a breakaway gap. All right. So that's how you use both indices for analysis. On the daily, we have this liquidity void, which I like as a draw for continuation, right? There was no price delivery here. And this is May 25th, if you want to see it on your charts or whatever. I'll be watching that. See if you want to fill that in. Like I said, some of these charts might be messy because I haven't looked at price yet, but how beautiful is this? Failed. Busy here. Come back up. Sell off. So we can watch this here. I'm going to delete this for now. And I'm sure the 15-minute time frame, oh, that's 4 hour. Sorry about that. This is what I liked, right? So we have this fair value gap, which was resting below what? Those session lows. And also basically the new week opening gap, right? So once we get below that, we can't get to the top. Yes, NASDAQ didn't respect its CE at first. The body's done the hourly, but we did get to the top of it, but we couldn't get to the top of the hourly inversion. And the clues from ES told us we would go lower. On top of this, you can see we just wicked into this inefficiency. See how we just wicked into it there? That's the institutional order flow entry drill, right? Wicked into it, displaced away, indicating that we have more sell side. So all these are footprints from the algorithm that we're discussing from start to finish of this review today. 15-minute, what are you up to? So just like with ES, this is what I'll be monitoring. See how we use this, if we want to use it at all, if it will be a factor. 4650 is that level. Let me chart it. All right, so these large expansion days are amazing, right? So if it was reversed and it was a large bullish day, you would just be waiting for retracements back down to a discount of a price leg and waiting for entries. In my opinion, my preference is waiting for a price to come to a discount and then entering on inversions, right? Because we're seeing confirmation that we're going to go higher for a bullish example, because if we're going to go lower, what would those premium or bearish PD arrays do? They would push us lower. Bodies above those fair value gaps is confirmation that we want to go higher and that price isn't respecting them, right? So a lot of good price actions today. Do you guys have any questions? And I guess, yeah, real quick, Willis, damn, we dumped today, man. Yeah, so this is what Willis was referring to. Where ES left the equal lows, we did sweep. So a nice baby SMT on between NASDAQ and ES. But I can share that PDF with you guys as well. Yeah, Jim, I recorded it. I'll just edit out any parts that I say some dumb shit or stutter or whatever, make it a little shorter, and I'll post it on YouTube and I'll send the link in the YouTube chat. I'll ping you guys. But definitely study some of this stuff. Today was a good example of a lot of the concepts we talk about. Anyone else have any questions? All right, CNJ said he tried along at 3 p.m. for the retracement for short-term liquidity rate in NASDAQ. And I was at the gym during this, so let's see what we got. Do you know what was your entry? Was it like this fair value gap or something right here? Something along these lines? Yeah, so somewhere in this area. The only thing I will say, yeah, maybe it was here or something. Okay, so this is 3 p.m.'s back here. You good, bro? This is the 250 fair value gap. I don't know if it's that specifically, but this general price action is fractal. And you said you just trailed your stop loss a little too tight. Yeah, and I don't necessarily blame you on these large expansion downwards days if you're trying to catch longs to trail the stop type, but also on top of that, we were close to actually no, we already met the higher time frame sell side objectives. I mean, it would have panned out, obviously, hindsight, if you had your stop below this low. But I would have just today, with the way we were delivering, I would have just stayed out of all longs, to be honest. I mean, you still got a decent move upwards on your analysis, CNJ. Yeah, you're right. It is what it is. Story life. Willis said, will you exit a trade manually if your fair value gap gets printed over, or do you give it more breathing room? I typically just put my stop where it is. So over like a swing high or something. Say I'm entering on an inversion, I would just kind of be monitoring if we close back above that inversion, excuse me. So I'll give it the breathing room, but you don't want to see certain things like that, right? You don't want to see the bodies close above. Othmanovich, apologies if I'm pronouncing that wrong, but yeah, I'll provide it right after this. I'll send it in one of the education tabs or something. So, got you. All right, so if no one has any more questions, I'm going to call it a night. It was a quick one, but I'll let you guys do any charting of your own. DM me on Discord or anything, or ping me in chat if you guys have any questions or want to talk about anything. I'll be around. I'm going to render this video. Yeah, we can do. Let me just look at dollar real quick. That's a good point. I was so mesmerized by the beautiful action in indices that I didn't even look at dollar. We'll go through it super quick. But it was some of the stuff I posted in the dollar chat. I got to switch a screen real quick for you guys. You guys should be able to see dollar. As you can see, we swept this low, came to this fair value gap, and beautiful reaction, right? So I want to see continuation through this wick CE from the weekly standpoint to send us to buy side liquidity and to dig up further into this large fair value gap. And I mentioned this before open. It's beautiful. Any retracements into this order block, I want to see support price, right? Last line of defense is this order block mean threshold, because it really shouldn't get back below. Now that we're above this fair value gap again, it shouldn't get back below here, right? We spent so much time in here, came below it, reclaimed it now. I want to see this act as support now to push us through this high, which is, see this CE, right, this body? I want to see expansion through that buy side. And then maybe we'll have to monitor how we deliver. This becomes a breaker or something like that, right? So we'll have to see. It'll take a couple days because I want to see a candle close, right? See how far, if we expand upwards. Okay. Look at 4 hour. Oh yeah, I'm right there with you, Willis. I don't want to say that word because it's going on my YouTube. Get copyrighted, but the battle royale. That's what I'll say. Continuation. We just have these clear buy side pools we'll be watching for. Right. So just use this price action when you're doing your indice analysis as well. So we want to see bullish PD arrays, discount PD arrays, support price higher for continuation to sell side in ES and NASDAQ. This was a nice institutional order flow entry drill here. For continuation lower in NASDAQ and S&P, I'd prefer not to see us really revisit like this area because we had sell side delivery, buy side delivery. This is a volume imbalance, but on top of the things I already stated from the daily fair value gap, this should be balanced. That daily fair value gap should be balanced for the most part. If we're going to go higher on dollar, I want to see it just continue higher here, right? Beautiful. All right, came down, swept this low one last time before going higher, reclaim this fair value gap. Be curious to see if this supports price. We can monitor that tomorrow. You can see also we have this. We might as well choose this one now. It's basically the same zone, but right, so use this continuation to upside for sell side analysis or buys in indices. All right. Any more questions? And again, I'm not trying to rush you guys off, just trying to save you guys time. But just wanted to make tonight more efficient, more of a plan. I'll start doing those PDFs too, so I'll have it ready before, so you guys don't have to watch me mark out every level known to man, because you guys know by now kind of how I do my top-down analysis, how I do my journal entries. So make sure you guys, just like if you're watching ICT videos, if you're doing these daily reviews, make sure you guys have like your charts open right now if you can as well, so you can see these actual things and you're not just following along, right? You want to see them in action so you learn to see them with your own eye, learn to trust them, genuinely see them on your own charts, see that they're real, see that these concepts work. But now going forward, I'll have the PDFs and stuff ready for the reviews. So We can save everyone time, and it'll be something I can send you guys after if you guys want to do further review. But I might be on tomorrow morning. I might not. I'll see how the market's looking. It was weird today, focused trading on myself and not talking to you guys. CNJ, just wait for a retracement to premium of a price leg, and wait for a bullish PDRA to fail, become an inversion. Yeah, that was the only annoying thing about today. Right at 9:30, we just sold off immediately. It would have been nice to see some manipulation at between 9:30 and 10 for the opening range and then get the short. But it is what it is, and there were still good setups the rest of the day. But again, this is why we show up. This is why you guys do reviews, not only with us as a team, but on your own. Because a year from now, you're going to be seeing stuff in the chart that you didn't see today quicker. You're going to realize these things, and you're not going to need anyone, right? You're not going to be checking my analysis or ICT's Twitter. So when I was first starting, I was on ICT's Twitter looking for him to point out a fair value gap or something every day, or looking for his review sessions. But at some point, you have to trust yourself, right? You have to trust the analysis. You have to be okay with getting things wrong. And that's why, if you're not super confident yet, you want to start with the paper, because you're going to get it wrong. I still get it wrong. ICT says he still gets it wrong. So you want to do that damage of being wrong on your analysis on a paper account, right? So it's not real money. Will said, did you see him pointing out the Monday CE wick in NASDAQ was really clean? No, I didn't see that. I'll bring up the chart one last time real quick. NASDAQ here. Oh, that's ES. I guess I can just do it on dollar. I don't really need to change windows. All right, Will said, did you see him pointing out the Monday CE wick in NASDAQ? Monday, is this? This is Monday. Was it higher or lower portion? I'm assuming higher. Lower? Okay. What did it like come up and reject it or something? Oh yeah, look at that. Yeah, cool, huh? Oh, even more? Oh, that's probably random. Yeah. Yeah, well, it's that see, I didn't even see that, but that's the long we were talking about on ES, so that was further confirmation. So good find there. But no, I didn't see ICT said that. So cool. But I'm gonna end it there, guys. Unless you guys have any other questions, just message me or something. I'm gonna edit this video super quick and I'll upload it to YouTube if any of you guys came late, and then I'll send the PDF as well. And if I'm gonna be on in the morning, I'll ping you guys for the live, or I'll just give you analysis through charts. So be on the lookout for that. Be safe out there, and I will talk to you guys in the AM. Rest up.